first year depreciation rate that you're going to show in K1?
Yeah, absolutely. So as we discussed, a few slides ago, our preliminary cost segregation analysis has about $6 million at the property. We're anticipating between 35 and 45% of your investment amount in a K1 that you would be able to utilize when you file your taxes in 2025.
Great. Nelson has a great question. Is there cash flow in the deal? And when do we start receiving dividends? And then is it return on capital or return of capital? He's asking.
Yeah, that's a great question. So yes, we have day one cash flow. It's going to be starting at 5% annualized. So if you invested 100,000, you're looking at 5,000 annually, and you get that in monthly distributions. The way that we decide when we're going to start dividends or distributions is going to be based off of where we close in that month. So if we close on the 15th of November, you would get your first distribution. It'd be the rest of that month plus 30 days. So as low as 33 days and as much as 60 days later, you get your first distribution, and then those continue monthly.
And then they're asking about return on capital versus return of capital, basically like meaning,
Correct.
Are they going to get their principal back as well as the returns?
Yeah, so the way that we do it is we pay you a return on capital. We don't dilute you with the returns that you're getting. So your basis stays the same. You earn that 7% preferred return based off of your original amount. And all of the distributions that you get are returns being generated from the amount of basis that you have in the deal.
Okay, great. They're asking about IRA. How does that work? And can they use their funds and things like that?
Yeah, absolutely. If you're interested in using IRA funds and you already have a self-directed IRA custodian, it's really easy. Really, the only differences are that the distributions, instead of going them directly to you, they go to your custodian, and then you can redirect them from your self-directed IRA. If you don't have a self-directed IRA custodian, we have relationships with lots of great ones. Reach out to us. We'll make introductions to the folks that we know do a really good job at teaming up with you, and we'll get you set up and get as much information as we can to you right away.
Okay, fantastic. Serge is asking a great question. What happens after the 5-year hold period?
Right, exactly. So assuming that cap rates are where we want them to be, it's 5 years is an estimate. So we always look at this and we want to say around year 3. And the reason we don't say year 1 or year 2 is that we need to have time to build NOI, because building NOI is what's forcing appreciation on the property, like that pro forma slide we showed. So about year 3, we've created usually pretty nice NOI growth. And if cap rates have compressed to a point where we can get the majority of the returns that we promise in 5 years and 3 years, we would 100% sell in year 3. We're aligned with you all in the back end, where all of our profits are coming from the sale of the asset as well. So we would love to sell early. Between year 3 and year 5, really what we're looking at is, what do we think the broader real estate market's going to do? Do we think that cap rates are going to compress? Are interest rates stable? Are they going to increase? Are they going to decrease? If you can kind of nail that down, and at least what you think and what your thesis is, that's really going to determine when you sell.
A lot of I have a couple of questions on why the owners are currently selling.
Yeah, no, I think this is a great question, and I've answered this one quite a bit lately. So it's a few reasons. So one of the things to keep in mind is the current owners are a REIT. So their motivations are different than somebody that is a smaller private equity group that isn't a huge institution. So the returns that they promise their investors, like if you were to invest in a REIT, you would usually expect a 7 to 8% return, much lower than what we're going to offer you through that kind of institutional structure. So for them, it's partly timing. They've owned the property for X amount of time. But one thing that we learned was that this particular owner, when they structured the loan for this deal, used variable rate debt. And the question that they're having to ask themselves right now is, do we want to pay for a rate cap extension, which could cost $600,000, $700,000, $800,000, and see if the environment has been better in 6 months? Or do we want to, we've owned this property for 4 years, we've increased NOI, we're able to get a pretty good cap rate. If we sell now, we can redeploy that capital into something else that's a really good basis, get our investors some of the money. That's the choice that they've made. So that's really the answer that they had to ask themselves. And that's really why we're getting the opportunity that we're getting, is it just makes more sense for them to sell the property for us at this price than to kick the can down the road with a rate cap extension that's costly and try this again 6 months later.
Yeah, and the second thing is, I think they're the original developers, or did they buy it from the developer?
I think they bought it at stabilization from the original developer.
Got it. And so when you're buying it at somewhat stabilization, the rents were probably markedly low. These guys, had an incremental increase, but they're definitely not to market. So there's a lot of value add left on meat on the bill, and that's why we're excited about it. Okay, how much equity is the sponsor putting in, or a part of the GP?
Yeah, so the way that we do equity and skin in the game is Vikram and Ravi always put, between $100,000 and $200,000 of their own personal cash in the deal. We also have general partners that are part of the GP that also put money into the deal. In any event, however that's split up, the general partnership always puts at least 10% of the total amount of equity. So if we're raising $20 million, the GP has put in $2 million of cash skin in the game to further strengthen that alignment between LP and GP.
People are asking about rent delinquencies in the property. I don't think there's really much rent delinquency based on the due diligence.
Yeah, no, I actually, had this question from one of our current investors that, got a little head start on this deal, and I was chatting with Judah and Ed about this. And there isn't a ton of delinquency, but one of the reasons why we feel really great about this property is we feel like we're going to manage this property a lot better than the current seller. So we had an investor that actually went on site, talked to the leasing agent, and the leasing agent mentioned that there was a little bit of delinquency and that there might have been, discounts that they were offering or concessions. And I think that that's really one of the opportunities. There's a lot of things that we noticed immediately when we got on site and we started looking through the rent roll that we saw as huge opportunities. One of them was there's 2 model units. Why do you need 2 model units in a build-to-rent property? You probably get one of those functional and start renting right away. And really, it has to do with when you're a really large institution that's managing thousands of assets, you aren't able to spend as much time as we are when we are, a group of 25, a team of 25 folks, and we have 17 active projects, and our asset manager is like a Hawkeye on the property management company that's managing each individual one of our assets. And these are the types of things that we really think we're going to be able to put into effect immediately.
And guys, can you please put in the chat box so our investors have that contact information, the how to book a call, email, the phone number, all of that information. People are asking about who will Viking hire to manage the property. And also the other question was, when is the transaction date? What are the timelines?
Yeah, so timeline's an easy one. I'll answer that one first. So we anticipate asking for funds end of October, first week of November. That's when the call for funds is going to be. The earliest that we're going to close this property is probably third week of November. However, what we've noticed with some of the other deals that we're currently closing right now is the agencies are really busy with the funds rate being decreased. Once they made that move and the 5-year and the 10-year decreased a bit, you have a lot of folks that are putting in applications for either refinances or to structuring new debt. So it is taking a little bit longer than we'd like. But for the most part, any seller we've worked with, any of the groups that we've worked with have been really gracious with extensions and helping get things done if the agencies are the ones holding up the process. So I would anticipate into this month is when we would really like to have funds in. If you need a little bit of extra time, just be vocal with my team. Let us know what you need, how much time you need to do your due diligence, and we'll do our best to get you in the deal. And what was the other question?
It was about who's going to manage the property.
Oh, yeah. So I think one of the great things that we've done that I've been impressed with is we use a third-party property management company, but instead of having multiple third-party property management companies in different parts of the country, we've built economies of scale with one. They were previously First Communities Management, were recently acquired by Asset Living, and they've built a team within their team that only focuses on our deals across the country and across our portfolio. So we like that aspect of working with a property management company. If things are slipping and they're not doing a good job, you can't really fire yourself. You can only make yourself better. But if we see an asset slipping, we can push them and push them and push them. And if for whatever reason it doesn't get better, we can find someone that is able to and turn that around very quickly. At some point in Viking's future, we have 10, 15,000 units under management. It might make sense to vertically integrate. But right now, the best mode of action for us is to continue to just have economies of scale with one really, really good third-party property management company.
And guys, you guys are asking a ton of really good questions. I just probably gonna have to wrap up in about a minute or so. But these are all great questions, and we'd love to sit down with you personally and like help you answer all of them. We have so much more to share with you, but we had to keep this presentation to a certain amount of time. So, that's why we would love to, if you guys can put in the chat again, the contact information, everyone. Okay, great. And also the contact information for them to book a call. Just keep throwing that in there in the chat team.
If for whatever reason you missed the book a call link, you guys can go directly to our website, and there's ways for you to
VikingMultifamily.com is our website. And then the other thing is you guys, anyone registered for this webinar will get an email with all the replay, all that other information as well. Again, I'm trying to do my best to answer as many questions as I can. Let's see here. Can you give them the minimum investments again?
Yeah, so you have a minimum investment of 50,000 for Class A and Class B, and then a minimum investment of 500,000 for reserve class.
Okay, great. All right, my friends, I hope you guys enjoyed. Thank you again for being part of our webinar. Thank you, Chris, for joining us. We presented a lot of good data for you guys. We encourage you to be part of this latest investment project. It will probably oversubscribe similar to all other projects. So book a call, find out as much information as you can. And I really like the BTR asset class. I think it's a very powerful asset class. It's the kind of tenant profile I like. It's in really booming submarkets, and it gets the best of both worlds from single family and multifamily. So with that, guys, with that said, thank you again for this webinar, and catch the replay if you missed anything, and we'll talk to you guys on the investor calls. Thank you so much.
Thanks, everybody.